Alright, hello traders. Quick video here on the Euro. I want to give you guys a couple of different ways to play this Euro trade. I'm going to show you some advanced pattern stuff that you may or may not be familiar with, and let you take a look at it. But the Euro, I want you to key you in on a couple of things. Number one, previous support. Where does it come in at? Well, if I draw in a line here, you can see the support level coming in right there, a bottom and then another bottom. So there is a support level there. And that support level 145.76-ish. And then also, if you look a little bit higher, you're also going to see that that was actually a head and shoulders pattern, a pretty nice one there on the euro dollar. I'm looking at this on a 4-hour chart right now, guys, for those of you who want to open up a chart and follow along. We then had a really nice ABCD move to the downside, followed by a rally. Now, what we're setting up looking at now is a potential termination of a Gartley pattern. It's not not a Gartley pattern, but a potential bat pattern. I'm going to show you a couple of different ways you can play this. You have X to A to B. A to B doesn't quite come into a 618 retracement. If I bring in my Fibonacci retracement level, go swing high to swing low with it, I don't quite get a 618. Now, some of you may call this a Gartley pattern. I simply don't choose to trade it that way. And then we get another pullback, the B to C retracement here. This is ABCD, just like we learned in grade school. And then what we should get, 127 extension, we're actually right there right now. The problem is we had a very, very deep B to C retracement, almost really back down into that support level. And so what I do is I bring in my Fibonacci extension. I'm going to swing low to swing high and back down in. And what you're going to see is that 127 extension is going to come in real close to that previous structure support, which should now become resistance. So we haven't quite hit the 127 extension because of that deep retracement that we had. So I'm looking at this market to continue higher just because we haven't really run into anything that would indicate we're going to stop. Now, why I said there's a couple of different ways you can play this is, if I bring in a Fibonacci retracement of the entire leg of this move, you're going to see I have 786, 127 ratio confluence right there near that resistance level. So this looks like it would be a pretty primo place to get short the market. However, as I said, this is not a true Gartley pattern because we didn't come into that 618 of A to B. And once again, those of you who might trade these differently, I'm just telling you my contention. Since we didn't hit the 618, what I look at is a potential bat pattern. Now, the nice thing about bat patterns is that if I'm going to bring in my 886 retracement here, the nice thing about bat patterns is that a bat pattern should terminate around an 886 retracement. Now, if you're looking at shorting the market and you've got an opportunity to short the market either here or here, where do stops have to go? Well, look left. Stops got to go above that spike high, don't they? I mean, that's where the market could potentially retest. So if I'm going to have to put my stops above this high, would I rather enter the market here at the 127 or here at the 886? Obviously, the 886. And so what I'm kind of looking at here is for this euro to come all the way back up into this 146.20s area, which, also, guys, as you can see, there's just a lot of congestion and stuff right up in here. So this is actually not going to be a bad place at all to look at shorting this market. Now, if I come out to a daily chart and we look even bigger, what you're going to see is the next stop is going to be these triple top highs that come in, or these, actually it's quite a bit more than triple top highs that come in right here. And so we've got the market has pressed down, we put in a lower high, and then the market has rolled over to retest. These lows have not been broken yet, which means that we are still technically in a bull continuation because none of these lows have been taken out yet. However, this is definitely a turning pattern, and if normally there are two different ways you can look at this. You can look at the overall market and say, look, this is a counter trend trade. Because this market, the underlying market is bullish, and now I have a bearish bat pattern. And you can say, look, if the market's overall bullish, I'm not going to trade a bearish pattern. Or you may say, hey, look, I got good risk reward on this. I realize that it's a bearish pattern, but it's a bearish pattern at an area where, look, we haven't been able to take out highs here. Market came in, lower high, and we haven't been able to take out lows. So we're really channeling in here right now. And so I'm happy to take this trade, understanding that the market is currently channeling and we're range bound, essentially. So you can look at this two different ways, and I am going to look to take that trade at 146.24-ish. And so I just wanted to kind of throw that out to you guys and just say, look, when you analyze these patterns and when you analyze the market here, there are a myriad of ways that you can look at it. And the important thing is that you have a set of rules in place, you have a concept of what you want to do, and that it's clearly defined. And this is just one example of that. So I hope this was valuable to you, give you a little idea on the euro, where I think it's going and what I think it's going to do. As always, make your own trading decisions and consult appropriate counsel if you do not, if you're not confident in what you're doing. So anyway, until next time, guys, good luck and good trading. My name's Jason. I'll talk to you soon.